Today, the stock market is trading lower and the currency market is looking kind of crazy as well. So in this video, I'm going to go through some of the top stuff that's going down right now, quite literally, and give you a little bit of the reasoning why, as well as talk about some of the setups or ideas that I see going into this week, where we see the markets crashing quite hard. In fact, the US stock market coming down pretty hard. The European and the Japanese stock market are following suit as well. And so what the heck is going on? Why are stocks and the US indices especially moving lower here pretty strong? And also, why do we see the dollar absolutely rising? Well, let's get into it. Okay, so with the thing I wanted to start first is, before we talk about the reasoning why, I just want to show you guys, for those of you who are just getting into today's markets, you're just watching it for now. Sorry for the rough start to the week, but we have a bunch of volatility coming in. Unless you were short, today is a pretty scary day. Don't ask me about my stock market account. Doesn't look so good today. So that's just the truth. But let's talk about it. So US 30 dropping here pretty aggressively. This is the Dow Jones Industrial. If you take a look at the SPX 500, this is the S&P, also dropping really precipitously. And then finally, you've got the NAS 100, which is the tech stocks, just getting absolutely slammed today. In response to this, do we see gold moving? Gold is also dropping dramatically. Kind of a weird one there, but I'm going to talk to you guys about that in just a second. And finally, a little bit of the catalyst here. The dollar is absolutely on an uptrend roar here. So we see a massive breakout, breaking through last week's supply. So what the heck is going on? What do we do about this? Well, let's first of all talk about the reasoning why. Why is the dollar up, and why are stock markets around the world looking pretty dire, looking pretty scary today? Well, here's what I've got for you. So basically, the big concerns seem to be two main components. So what I'm going to do is I'm just going to make a little space here and write this out. Okay, so point number one is one that we've been talking about, one that we've seen a lot in the news, which is COVID. Okay, we have had some concerns resurface about the Delta variant, which is that, next strain. I'm fingers crossed that it's not a big, a catastrophic issue, because I had just gotten rid of a lot of the masks that were in my my place. So I'm hoping that that is not a 2.0 here. Let's hope that that doesn't get worse. If you track that, or you have something that you could offer in the chat down below, or the comments down below, please do. It's not my area of expertise. That is not my specialty. But we do see fears around COVID 2.0, or that's not what they're calling it. I'm just coining that. But the Delta variant being something that is scary and potentially growing problem for worldwide markets. Because remember, whenever we have pandemic stuff, that shuts down economies, shuts down markets, and causes economic slowdown, which is not what you want to see when we are trying to recover from everything, right? That's the first point. The other point is what we were really talking about a lot last week, which is inflation. Okay, now inflation is something that is kind of scary for markets. Why? Well, because inflation hurts the consumer, and it can potentially slow down economies, right? If everyone's money is worse off, it's harder for people to go buy stuff. It's harder for economies to grow GDP wise. It does temporarily sometimes cause the markets to go up, right? Because stocks rise relative to the inflation. However, adjusted for inflation, it can get scary. So those seem to be the two main catalysts. So why is the dollar rallying in response to this? Well, we saw in the early 2020 period, where we saw the market absolutely tank, in response to COVID, we're seeing a similar behavior. We're seeing the dollar rise dramatically here, as people basically put their trust into things like the Japanese yen, the US dollar, and the Swiss franc. Risk off sentiment basically coming in here pretty hot today. Now, is that going to last? Well, we'll discuss that in a moment. But the other concern is inflation here. And inflation happens to be kind of a weird one, because you're like, well, why is the dollar going up on the news of inflation? Well, inflation is something that can kind of ricochet around the world. You can have other currencies that also do very poorly when the US is doing poorly. So this idea around inflation, that the dollar is rising, is because there's a lot of expectation or pressure being put on the Fed to slow inflation. We saw 3 periods in a row, 3 CPI reports that came out in a row that were higher than expected inflationary numbers. That is something that is bearish for, or I guess it's potentially bullish for the currency, but it is something that sort of is expected to prompt the Fed to do something about it. Now, when the Fed does something, if they were to taper, raise rates, et cetera, to slow that process, that causes the US dollar to grow in value, right? If they're printing less money, that tends to make the currency do better. So anyways, back to the S&P 500, for example, here, we do see the market dropping pretty strongly here, and in fact, trying to break through this level of support. Watch this daily close. That's going to be one thing that I want to point out with everything going on, is if you get this major close underneath today, we very well could be seeing some deeper retracements here on the S&P 500, as well as global stock markets around the world as well. So when I'm looking at this thing, if you look at it on a daily chart, that's a pretty aggressive drop, but truthfully, I think it does have room to potentially come down lower to this level here, right? I personally will probably be looking to maybe pick up some buy positions should price give me a little bit more of a retracement there. We could probably draw in some fibs as well. We can take a look here. Does this give us anything? Yeah, that 38.2 looks pretty promising for a potential long setup. You might ask, well, why, if you have all these problems that are arising? Well, it's just my opinion, and I could be completely wrong about this, but my opinion is that we are sort of better situated for dealing with a pandemic than we were a year ago. Like I said, not a medical professional. I don't have a truly qualified opinion on that, but that would be my better expectation, would be that, okay, well, we've probably made some adjustments since then. We've probably, all the infrastructure and stuff that's going on, maybe we could handle a little bit better the second time around. And so if stocks were to dip, it could be short-term fear. Longer term could still be a good value grab as prices continue to rise overall. So we'll see if that plays out. That would be my opinion there on the S&P 500. I do like that from a technical bounce perspective as well. You may just get something where, price comes down and I could look to enter with a reasonable stop loss and look to try and capture some of the rebound. If it wants to happen, great. If it doesn't, maybe I'll just take a small loss and get out of the way in case this thing wants to keep going lower. That's probably how I would approach trading this. What about gold, for example? Well, gold here, like I said, that dollar strength coming in very, very hot. And we talked about this one a lot last week. I pointed out this and so far looking pretty strong here with my thesis there bearish wise. Last week I pointed out that if price was able to close decisively above or below the 200-day moving average, that I thought it could be a signal for bulls or for bears. And now we are seeing, like I said on Friday, we had that decisive close. I mentioned this in my Sunday analysis yesterday, that I think more price to the downside here for gold is in order. I think that we could be headed back down to 1770 or 1750 should things continue to be the way they are. Unless you get some sort of dramatic reversal today, I think that likely gold could come down here. Of course, it's just going to be dependent on if the Fed steps up and says, something that is, props markets up and increases I guess security. That could be something that moves gold. But gold is a weird one because we see this quite often. When markets drop, a lot of times gold drops with it, which sounds counterintuitive, sounds kind of weird because people are like, well, don't people buy gold when they're fearful? And the truth is we do see gold performing better than markets, comparatively speaking, but gold tends to still drop in times of fear as people just flock to that dollar and they just hold on to their cash kind of thing. So, my thoughts for gold is I think that we do have more downside here. I think that we were moving back down to 1770. Of course, as always, I can be wrong about that. And my big trades that I see out there are things like the S&P 500. I do like that pullback potentially for a buy. I will be watching that myself if that comes into play. If I see some confirmation on the lower time frames, I will take the trade. Perhaps if I do take the trade, you guys will see it inside of the Discord. I'll just pull this up. I do have one trade that is rocking it today, which is the Euro USD. Of course, with this dollar strength, my trade is looking beautiful. So I shorted last week after that fake breakout. I mentioned this on the streams last week. Took this trade. Price just completely jumping through the lows there now, you can see. So I entered that trade, called out inside of the private Discord. If you're not already in the Discord, there's a link down below in the description, and there's a promo code for making it towards the end of this video. You'll get access for 25% off if you use it for the gold membership. And I think it's like $5 off if you choose one of our monthly options. But come try us out, check it out, come see what we're all about here in the A1 trading community. And that's pretty much all I've got for you guys. Again, there's my, we'll just take a look at the Euro USD trade just because. Look at that, down to the lows of this move. Beautiful stuff there, basically sold back around in here. on the lower time frames and looking for a follow-through move here. The euro really taking a dive here in response to their shares moving lower, as well as the S&P and the Dow and all the US indices as well. So with that said, guys, hope this was helpful to you. Again, just explaining everything going on today. And with that said, we will see you back in the next video.